Focus brought to you by IG. Taking a look at what's been some really wild dollar yen price action over the course of the last couple of weeks. I mean, over the course of the last couple of years as well, but especially the last couple of weeks amid Bank of Japan rumors that a change could be coming, and then a Bank of Japan decision, no change at all. And so a little bit of giveth and taketh away for that yen piece that we'll get into in a second. But let's lead off with some of this crazy price action we've seen in dollar yen over the course of the last couple of years. You'll remember, and we'll show the greater historical chart in a second, that 150 level is pretty much the 30-year high, just above it. The 30-year high for dollar yen over the course of the last 30 years. And we were there in November, and from around mid-November until recently here in mid-December, nearing the end of the year, dollar fell 1,000 pips from its high to its low. And it's bounced back a little bit, and we'll get into that bounce back in just a second. But some real significant, one, price levels to the upside, and then two, price action to the downside over the course of essentially the last month and a half of the year here. And just to further hit home how crazy this historical price level is. And usually, you know, you see volatility cluster at these extremes. It might be more likely to see some big, 100 pip, 200 pip, 300 pip days when dollar yen is up at 150 than it is to see it when it's at a more historically normal price like 110 or 120. You see the historical trading range, especially from, 2002, 2003 until the pandemic, or even until 2022. So, the 20 years leading up to 2022, really trading between 80 and 130 here in dollar yen. And the last 2 years, primarily trading between 130 and 150, which is some significant upside. And if you look far back enough, last time the market was above 150 was more than 30 years ago in 1990, 1991. And we've traded that level just a handful of days, but a couple of times in the last 2 years. And so potentially a lot more room to run for that yen if some things line up. And so what has to line up? What has been giving the yen some problems in recent years? Well, the Bank of Japan has not hiked rates since 2007. And there's a lot to take from this graph. It looks kind of boring, but man, there's a lot going on here. This is the overnight rate from the Bank of Japan, similar to the Fed funds rate that the US Fed controls. And you'll know that the Fed has hiked US overnight rates from 0% just after the pandemic. Obviously, rates globally were really brought down to 0% if they weren't already there, like they were in Japan. After that pandemic, to spur some economic growth and a potentially tough time for the economy. And since then, the US has hiked to above 5%. And since then, in Japan, they haven't hiked once, and they've actually stayed at negative 10 base. They've been negative since 2016. And you can see it's been nothing but cuts since 2007, 2008. And so why is the yen just starting to see some upside now? The Bank of Japan hasn't hiked rates, but they have recently talked about hiking off of that negative 10 basis points and potentially going beyond. There were some rumors a few weeks ago from a Japanese central banker, looking at this inflation data from Japan and some of the trade balance and some of the GDP numbers from Japan, saying that the data is bouncing back. It's looking, more and more like we could get off of negative and could even, after getting off of negative, move beyond. But another thing to take from, if I go back to the overnight rate chart, another thing that kind of, until the actual recent Bank of Japan meeting that occurred, which we'll cover in just a second, trust me, that's where we see some huge moves in that yen. But going into the Bank of Japan meeting, you heard these rumors. You're looking at the Japanese inflation. Wow, yeah, it's above 2%, and they haven't hiked yet. So things, maybe the stars aligning for a hike. Well, back in the late aughts, in 2006, 2007, before the financial crisis, when interest rates in the U.S., the last time they were 4, 5, 6%, and you might look at this graph and be like, oh yeah, the Bank of Japan, they had high rates around that same time as well. They topped out at 0.5 percentage point. And so something that went unnoticed to me is, here in this last 25 years of Bank of Japan action, they haven't even gotten to 100 basis points of upside. And so even if they were to get out of negative territory, there's not a historical case to be made for Japanese rates to get to 1%, 2%. US rates are still above 5%. And even with all the dovish talk from Fed Chair Powell in the most recent FOMC meeting, the market expecting that they might cut down to 4% or 3% is really the outside chance. Japan hasn't gotten to more than 0.5% in the last 25 years. And so, yeah, it's nice to see Japanese data bouncing back, inflation above that 2% target, but it's only at around 3% or so. And though we saw some huge downside in dollar and huge upside in yen off of the rumor, you go back to a couple of weeks ago, this is December 7th, when the rumor came out, and the dollar fell from high to low more than 500 pips. And now it bounced back significantly there, but went from trading around 145 to trading under 142, and it was actually above 145 earlier in the day. This is the 1 minute chart, so it's not getting the whole day. But yeah, a 500 pip move from high to low on that day, bouncing back a couple hundred pips, but still huge move there on the rumor. And then came the actual news, which was that they weren't going to change. And there was actually some potentially dovish statements out of the Bank of Japan governor, Ueda. And you saw this dollar yen climb back from below 142.5 to close to 145. So, an almost 300 pip rally, excuse me, from low to high. And once again, it gave back some of that move. But now we're back to, 143, 144, closer to that 150 high than those more normal historical values of 110, 120, 130. And so the Bank of Japan ends up not doing anything. We'll see if that rumor of higher rates does come into play at the January meeting of the Bank of Japan or in the future. But it is starting to feel like Japanese yen upside might only be seen on some U.S. rate downside, because right now with the dollar yen priced around 145, that's pricing in U.S. rates by the end of next year being lower by 100 basis points or so. Now, if they move lower by 200 basis points, maybe that yen sees even further appreciation, gets maybe back down under 140. But if U.S. rates bounce back and they actually only cut, 50 basis points or 100 basis points, that dollar might see some strength again. Now, of course, the scenario that I think a lot of people were, especially yen, people long yen and short dollar were hoping for was, okay, U.S. rates are projected to move lower. Okay, that's great. That's one side of it. And now Japanese rates, they're projected to maybe move higher on this rumor. And that could cause this dollar yen to really revert back down to at least, 1 135, 130, where it's been trading the last couple of years here. But if it's only going to be US rates slipping 100 basis points or so, and the Bank of Japan isn't going to hike like was rumored, going to be a lot harder to get that mean reversion here from dollar yen. But either way, dollar yen becoming one of the more volatile major pairs, and plenty of data coming from the US and Japan, as well as two central bank meetings from these two central banks in January.